What is going on, guys? Ricky in the Flip Lab. Today, I'm here with Nic Palladino. Me and Nick, we work in the same office together. We've done a deal together this past year, and he's just been building out a solid rental portfolio out in Arizona, and he also flips houses with Ricky Gutierrez. So good to have you here, man.
Yeah, thanks for having me. It's a pleasure. I'm excited for this today.
Yeah, for sure, dude. So I kind of want to start off what we were just talking about, short-term rentals. How'd you kind of initially get into it, and what's your portfolio looking like these days?
Yeah, so I actually have one short-term rental out of the 6 properties that I owned, and it happened to just kind of fall in my lap. It was a wholesale deal at first, and I love the area, so what ended up happening was I wanted it as a primary residence, and then I had a client purchase an Airbnb a couple months prior, like down the street, and I was like, you know what, let me ask him how his Airbnb's doing, and it was doing phenomenal. So I was like, you know what, before I turn this into a primary residence, I want to try out the short-term rental market, turn it into an Airbnb, turn it into a VRBO, and if it doesn't work out, I can always fall back and live in it. And it needed a full renovation anyways, this specific property, so I was like, I'm gonna put 80, 100,000 into it regardless if I live there or if it's gonna be a short-term rental. So what I ended up doing is just tailoring it a little bit more towards like the short-term rental renovations, very open space, a little bit higher end appliances, granite, stuff like that, and I just threw it on Airbnb last year, February of last year, so almost a full year ago. And what I didn't know is the high season of Arizona for short-term rentals happened to be the exact time that I listed it. So within the very first day of me listing that property, I had like $8,000 worth of inquiries booked out over the next couple months, and I blew my mind. I didn't know what was going on. So that was like kind of my first taste of short-term rentals and how I really got into it. I didn't run a whole lot of data, which is what I normally do if I want to buy a property. Like I want to get all the comps. So I did a little bit of due diligence, but most of it was just kind of like trial and error. Let me try this out. If it doesn't work, I have a plan to fall back on. So that's how I got into it. And like I said, only one of my 6 is a short-term rental right now, but moving forward, I want to get into more short terms for sure. Yeah.
So you have 5 long-term rentals then?
Yeah, I house hack 1, so I live in 1, and then I have 4 long terms, and then 1 Airbnb. Correct.
What's like the biggest difference between the long-term rentals that you have and like the short-term rentals? Have you seen just a difference in managing them, the amount of money you're making?
Yeah. So the amount of money I'm making, I actually just did the numbers last year for my Airbnb. For 11 months, I did just about $40,000 in profit of $80,000 of growth for my short-term rental. So my margin was about 50% on that, but compare it to any of my long-term rentals, it 2x'd my student rental, which is my second best cash flowing property. So there's a lot of cash flow play in these short-term rentals, given there's also a lot of fluctuations, there's a lot more stress that goes with it, there's a lot more managing that goes with it. So if you're just trying to maximize cash flow and you're willing to either delegate or outsource any of the work or do the work yourself, it's well worth it. Especially right now with interest rates increasing, it's hard to find any long-term rental that you're going to cash flow on unless you literally force it with like 30-40% down, and then at that point it's like opportunity cost where you can go and buy a short-term rental for the same thing. So my other long-term rental is a student rental too, which cash flows $800-900 a month, I think, and that one's my second best cash flowing one, but I average about $3,000 to $4,000 a month on my short-term rental profit.
Yeah, I mean, that's super hard to beat for just one single family house. But I did hear even earlier you were talking about you have to like run over there today and like clean it.
Yeah, that's funny. Like, I actually
you don't have to do that with, like long-term rentals. You might see that house once every couple of years sometimes.
You're absolutely right. I haven't been to 3 of my rentals in the last 2 years. I haven't set foot in the 2 in Phoenix, which is incredible. They're very, very passive, and I'm very grateful for it. It's very easy. I actually got a text today from my second rental that a family lives there, and their toilet's leaking, and that was the only problem in the last like year and a half that I've had with that property. So yeah, if you want really hands-off long-term, if you can find the deal. But I don't mind the Airbnbs, the going over there and messaging people. I manage everything on my own. So besides some of the cleaning, I actually did start cleaning a little bit on my own. Like if I have an extra time once a week and I have that day open, I'll go over there and clean it myself with a friend, and I'll pay him, and it saves me $160 to $180 depending on the day. So I've even gotten a little bit more hands-on with it, and it's just capitalizing even more on my cash flow. So I don't mind it. I always like being hands-on with all my stuff. I manage all 5 of my properties, and it's no problem for me.
Yeah, my partner in New Jersey, he like self-manages our rentals and his rentals. He has like over 40
you said
doors.
40, yeah, I remember that.
Yeah, so I think it's definitely possible. Like some people that are brand new just think right away like property manager and just delegate it all. Especially like I've been hearing in the short-term game, you could end up give away 25% of your
That's usually what it is, yeah, which, right off the top.
To me, that's, especially fluctuation in seasons and stuff like that. It at the end of the year, it seems like those profits could really go down if you're giving away 25%.
It's a lot, because like 25% of my 40 would have been, 10 grand right off the top for something that I had no problem managing this entire year, besides a little bit of added stress and the messages and stuff like that. But it's definitely worth trying. And I get a lot of clients, because I'm a real estate agent too. Their number one question is, well, I don't live in the state. Like, how do I manage it, or how do I hire a manager? And I'm always like, my first 3 properties I bought, I didn't live in the state, and I was still able to manage it. Yes, it's a little bit more difficult, but I don't think that should be a barrier of entry for people. And I always say, if you do live in the same state, try doing it on your own. Try managing it before you delegate that and outsource it. And if it's too difficult, a month later, just be like, go find someone, interview a couple short-term rental companies that will manage it, or property managers that will manage your long-term. And we talked about this before. I mean, if you have a long-term rental manager, they're really just the middleman. You're still paying for the toilet to be fixed. You're just not dealing with the phone call. And I don't even deal with phone calls at this point. I have to get text messages. It's like that simple. It's like, okay, I'll send my handyman over. He'll be over at 5. Perfect. It saved me 10%, 8 to 10% a month on long-term rentals too.
Yeah, I think people just kind of get scared too of just the whole out of state, managing it. I say the same thing. I bought my first rental in the hood of New Jersey for $85,000 when I'm living out in Arizona. And I knew though, like my partner was over there, so he had a lot of subs and people that if something went wrong could go over to the house.
Go over there. Yeah, you're right about that too. If you got systems in place elsewhere, then it's a little bit easier rather than like not knowing anyone. But yeah, that's true.
So are you booked out for Super Bowl week on your short-term rental?
Yeah. So I'm glad you brought that up.
That's Super Bowl and the Phoenix Open in the same week in Arizona, which for those of you guys that don't know, it's always a crazy weekend just with the Phoenix Open, but you add Super Bowl on top of it.
And you add just February in general for the weather. February, March is always your high season, no matter what's going on in Arizona. And I think Barrett-Jackson may be over there too.
That's like end of January. Yeah.
It's wild. Like, so that's something I want to talk about, because I do think I underpriced my Airbnb for the high season. I was booked out for that week of Waste Management and Super Bowl about 2 months ago. So I was booked out quite a bit, 4 or 5 months in advance almost. And I had my ADR, my average daily rate for that entire month, close to $1,000. So fortunately and unfortunately for me, I think I could have squeezed out a little bit more, but I also have an entire week booked out for that specific weekend, which sometimes you'll get like a 2 or 3 night stay. And it's like you have more vacancy, but it's harder to kind of get those other days filled up. So for me to get a week is pretty cool. I think I'm getting $6,000 profit just for that 6 days that those people are booked. And then I have only 3 of the 28 days left in February that are not booked out. I have another week stay after that. That's like $3-4 grand. So I think my gross already for February is close to $13,000.
Damn.
Which is great, because it almost my last year was $9,600 for February, which if I can beat that every single year, it's great. So I'm just like tweaking some small things now, raising my average daily rate moving forward, because almost my March is fully booked out too. So there's like a balance with Airbnbs. You don't want to be booked out too far in advance, because obviously you underpriced it, but you also don't want to miss out on opportunities because you priced it too high. So I'm still learning that balance. This is my first January that I've ever had, and I'm surprised with my January because it's the opposite. It's like maybe 35% occupancy, which is the
Okay.
lowest I've ever
Yeah.
had in my Airbnb before. So that was a learning curve too. So I'm starting to learn, like, January is not the hot season right now because you just got over with the holidays, and then you have everyone coming in February, March, April, May, which is your money maker, big time for Arizona specifically.
Yeah, it's an interesting time. I feel like with those short-term rentals as well. Some people I talk to sound like they're really struggling with them, and because of maybe like the recession, the economy, less people are booking. But it sounds like you're having some of your best booking months coming up that you've seen so far.
Yeah, exactly. And I was honestly a little bit concerned with that because my January wasn't booked out. I was like, is this what the whole winter is going to be? And I was a little concerned. And then I got an influx in bookings over the last like probably 4 weeks, and almost all of my February, March, April, and even going into May is like over 50% occupancy, which is really solid. So I was a little bit concerned with that. I've also talked to a few people. It really depends on the location, has a little bit to do with it. I'm just in Chandler, Arizona. I'm not in Scottsdale or anything, so I can't imagine what people are paying in Scottsdale right now for Waste Management Open and stuff like that. But I've talked to a few people, and it really depends on how good quality your Airbnb is, if it's really high end, because people are willing to spend a little bit more money February, March, and April, so they're going to target the ones that are a little bit nicer, I think, in those times. And then there's a few other things that I've noticed that kind of affects your occupancy, obviously reviews and stuff like that. But
Yeah.
I've been very fortunate. I'm very grateful for it as well, because it is a good source of income for me and relatively passive as well.
Yeah, I love it. I've been thinking about jumping into it and just watching yours from afar.
Yeah.
It's definitely inspiring, especially like you said, some people get so caught up in like the numbers, this, that. Like you saw a good house, you thought it would work. If not, you had multiple
Exit
strategies, which is always important. But that's great to see. Now, how's running student rentals? I've always thought about going down that industry. Like, I'm in the hood, so like, you know, that's like similar where there's more risk involved, but typically the cash flow is better. Is that what you see from student rentals?
That's exactly what I see. Do you still have yours in Jersey?
Yeah, we have about 10 over in Jersey.
Okay, exactly.
Yeah.
So I'm very similar to that, where I don't have them in the best area. I bought them by GCU, and it was only because that was when I bought them in 2019. It was the only qualification I can get because it was very affordable out there, because obviously it wasn't in the nicest area. So that's where I ended up there. I have no idea where any of this was. I didn't even know it was that bad of an area until I really moved out here, and I was like, oh yeah, like I bought in one of the worst areas in Phoenix. But because of the purchase price, rents don't fluctuate that much. There's a certain point where no matter what the condition of the house is, your rent's not going to drop below a certain level.
Yeah.
The purchase price might, but if you do enough work to it, I didn't even do work to the two that I had out there. So that was my plan. I was like, all right, let's go look for a university. It was either ASU, GCU, and I think that's really the only two campuses that I even knew of. And ASU was too expensive in Tempe. So I was like, all right, well, my decision is GCU. And I walked 3 properties in 2019 one weekend, and I ended up buying the second one, knowing that it was going to be a student rental, and it was a 4-bedroom. So I was like, perfect. A lot of these are 3s. I'm renting it per room. That's an extra $400-$500 a month for me. I was like, this is easily going to rent for $1,800. I think I originally had it at. My mortgage, did all the calculations on that, was under $1,000. So I was like, that's pretty solid. Like, I paid for water at first. I paid for the Wi-Fi at first, and I was cash flowing about $500 to $600 a month right off the get-go from that one. So that was great cash flow for me. Like, cash on cash return, solid. Cash on cash return right now after my refi is over 25% around, which is really solid. And I've raised rents every single year on that student rental. I have all 4 rooms fully occupied for the last 3 years. Now, that's a little difficult with student rentals, a little bit more stressful during the times of vacancy, because you have to not only fill up the rooms, we have to make sure they all get along with each other too.
Yeah, that's true.
And that's why I only have 1 student rental now, because I had 2 at one point, and there's so many internal conflicts within the roommates that it was just that was too much for me. Like, even with manager, like the manager wouldn't have even been able to do it either. There's like police called reports, them faking like break-ins and stuff like that to try to get the other girls to move out and scare them. So there was like, they'd put fake handprints of mud on the
so
window.
It was the girls too.
Oh, the girls. Yeah, it was big time. But that's like the majority of GCU is female. So like I wanted to go that route because I had more options to fill it up. So yeah, that, and my second student rental is now a family rental, which is amazing. I still cash flow just as much as I was with a student rental. But my first one I ever bought is still a student rental, almost 4 years now. And that is, like I said, one of my second biggest cash flowing property. I bought it for $209. My rent for all 4 rooms is like $550, $500. So I'm at like $2,100 a month for that property, which if I rented it for a family, probably $1,700 in the condition it's in.
Yeah.
So yeah, I'm getting quite a bit more out of it. And the only thing I pay for now, I slowly started getting out of the monthly bills. I had pushed over the Wi-Fi to them, and I'm only paying water now. So
there you go.
Yeah, and the way I got those rooms filled up was running an ad on Facebook. I did just a selfie video, 15 seconds. I'm like, hey, I'm across the street from GCU. I showed the school in the video, set the demographic or the radius for that ad within a mile of the campus, and I had a ton of people reach out. Now it's a little harder with Facebook's restrictions on like who you want to place the ad with and stuff like that, but that was how I got it at first, and then a bunch of GCU Facebook groups. So that's how I marketed it. I never put it on Craigslist or anything like that, and it worked out really well so far.
Yeah, GCU, that's like an interesting area. It's pretty bad, like right around it, but like I feel like if you're like right next to campus, it's a pretty good spot to be.
Exactly. They have security like 24/7 surrounding that campus, and it's like night and day difference. Like you go over, it's kind of like, I don't know if you guys are familiar with USC. It's very similar to that. Beautiful campus, a ton of money spent on campus. You step over to the other side of the street and it's the complete opposite. But I'm so close to GCU, within 15 seconds to the nearest security gate, that it's pretty well secure there. And they're expanding like crazy. And my exit strategy for that when I first bought it was they were buying houses for double the value a couple years ago just to build on it and develop on it. They stopped a little bit now, but I have a feeling maybe in the next 5, 6, 7, 8 years, hopefully they make me an offer to buy out and they want to expand on it. I'm the next street over. Like they're coming to me next if they do expand. They're maxed out east and west, so I'm north. So hopefully that could be an exit if I ever wanted to.
Yeah, sometimes those development deals, they give you a nice little paycheck and you're like, all right,
yeah, I'll buy something else. Yeah, exactly. Buy something else. That would be my plan. Buy something maybe in a little bit of a nicer area now that I'm more familiar with Phoenix. But I'm glad I did it. I mean, that first deal is the hardest for anyone because you have so many doubts and second guesses, uncertainty, people telling you shouldn't do it, trying to protect you. So that was a hard deal, but I'm glad that I went through with it for sure.
Yeah, I mean, especially, you were a young kid modeling out in California. You never really knew anything about Arizona.
Correct, yeah.
For those that don't know kind of the story, what made you then go from like modeling in California to investing in real estate in Arizona?
Yeah, so when I graduated high school, I basically started traveling around modeling full-time, lived in Miami, lived in New York for a little bit, would go back to Oregon, which is where I'm from for a couple months out of the year. I'd go down to Los Angeles for a couple months out of the year just for modeling. And then I did my online personal training business as well, which is what helped me qualify. But I was in a relationship at the time, so there's a lot of personal stuff that kind of transitioned me out to Arizona 2 years ago. And then I started buying rentals out here too. So I was like, you know what, like we ended up breaking up off that relationship in Los Angeles. And I was like, I really don't have anything out here. I had a big friend group out here. I was starting to familiarize myself with the Arizona market a little bit more. So I took the leap of faith 2.5 years ago, completely stopped modeling and went straight into real estate with absolutely like no real estate license, moved out here. I had a lot of savings, so I was good to go. And my friends made an easy transition for me. So that's how I kind of really got into it. And then I have my real estate license now. My business partner, Ricky, needed someone to represent him on a commercial building, and I was like, I'll just get my license for this deal and it'll be worth it for me. And then I started building up a client base with my real estate license as well, so I represent people on that aspect too. And that's kind of like what really got me into real estate. And then, as you know, we got into flipping more recently, probably a year and a half ago, full time now too. So I do a little bit of everything: real estate agent, investing on my own with buy and holds, and then flipping houses in real estate too. And it kind of just slowly transitioned from modeling to real estate. Yeah, over the last 2.5 years, I would say.
Yeah, and it's good you're covering kind of all aspects of real estate.
Mm-hmm.
You can make money a lot of different ways when you have all those exits, especially now with the market turning downwards. And I know you guys last year were kind of really crushing it with flips, and it seemed like you had a lot of projects going on at the same time.
Yeah.
I know as of late, flips have been slowing down.
Yeah.
What's kind of been that transition during this market right now?
Yeah. So it's the hardest transition I've ever had with really any career. Like, it went from, we did 21 houses in 2022 with like 19 of them being the first 6 months out of the year. So we only picked up 2 properties in the last 8 months. So going from, we were doing almost 100K a month in profit to down to pretty much, like nothing at some point. We took a couple of losses too. So that was a very tough mental transition for me, and a lot of really trying to figure out deep down what I really want to do. If I really want to, like, is this what just a lot of like doubting myself in a sense too, because of how fast the market shifted. But then you got to remind yourself how far you've come, how successful we've been so far. And you got to dig down even deeper and just try to find the deals, like just more work in a sense. I know a lot of people are like, you got to double down and put even more work in now. Like, deals aren't just flowing through. You don't have the people, the hedge funds buying either. So the exit strategy is a little bit harder right now. And I would say a lot of us not buying right now was me kind of in my own head, like, man, like not having the confidence that I used to have. So building that back up has been a huge life lesson for me, not only in real estate, but just in general, having more confidence in myself. So yeah, the last like 4 months have been very tough mentally, but I'm definitely like getting better and better, more motivated, more confident in everything. So I'm certain 2023, I don't think it's going to be like the first half of 22, but if we can just get consistent with it, 1-2 deals every other month, 1 deal a month, that would be sweet for me. That'd be awesome. Kind of building that back up, getting our systems in place again, and getting an actual structure in business again is a goal for me for sure.
I think it almost, at least for me too, it was like the hardest time, and it kind of makes you reevaluate and almost have to like level your game up.
Yeah.
Where when the market was really good, there were a lot of mistakes you could have made, or just kind of been a little lazy here or there, and like the numbers still worked out.
Worked it out.
The profit's there, and when the profit's there and the money's flowing, that's not when you're really like hard on yourself and your systems and processes. Like, do we have this all dialed in? But I know for us, it was like a time, recently, it's like really being hard on yourself and, hey, like, where do we have to shift? Or let's start pitching maybe creative deals and trying to make money in all these different ways.
Different avenues.
And it's tough. I think in the long run, though, only kind of the strong will survive, and it will weed out kind of a lot of the people that weren't really meant to do real estate full time anyway.
Full time, exactly. A lot of people kind of did it part time. A lot of people did it as like almost a hobby or a side hustle. It kind of felt like for a little bit. So I agree with you on that. You have to be more creative, like you guys have been. You guys pushed through it, because I've been talking to you before this podcast, and you guys are doing great. You guys are finding deals elsewhere, out of state, which is incredible, and it's motivating too. So you're inspiring me to kind of think outside of the box as well, which is really, really cool, because you guys have a lot of systems in place with everything that you guys do in certain different markets too, which is really cool to hear.
Yeah, man, it's not ideal, but you knew it was coming at some point.
Yeah,
the market was like going up for so long, and I was a part of it for like the last 4 years. Yeah. But I mean, when I got into it, people were saying, "Hey, like the market's about to turn."
Yeah,
that was 4 years ago.
Yeah, exactly. When I first got my license, a lot of clients were waiting, and they missed out on almost over 50% equity push for a lot of it. And I mean, at the end of the day, like if you're holding 5, 6, 7 year play, which a lot of my investor clients are doing anyways for buy and holds, I mean, if you got a good rate, you're locked in, like you're still cash flowing great. Yeah, it sucks to see on paper the value of your property dropping, but if your game plan wasn't to sell within the next 6 months anyways, then it's just something that you're just gonna have to deal with and not think about, and just know at the end of the day it will appreciate. And that was very interesting too, to kind of see how fast we pushed up in the last year and a half, and then how fast we dropped back down. Like it was like within a month. I remember June, it was like the deal we did with you, we did great on that, and then within the next literally a couple weeks it would have changed. Like our profit would have been, I don't even know, it would have just been almost non-existent if we waited even a couple weeks on that property.
Yeah, I remember that deal.
That's how fast it adjusted. Like it's wild to really think about. Like you wake up the next day and all of a sudden all this bad news came out. Rates were shooting up. Yeah, even Lenny, my mentor, he said he's been doing it for 2010, I think. He's like, I've never seen it adjust this fast. So it'll be interesting to see what happens moving forward too with everything. I'm really eager to see in 2023 what's going to kind of happen with the real estate market.
Yeah, and I love talking to you about it. You're an analytical dude. I know you're always reading the data. What are you seeing? We're at the beginning of 23 in Phoenix. What are you kind of seeing in the Phoenix market right now?
Yeah, so I actually just kind of read up on everything. I did a video on this yesterday. So we are actually starting to see an inventory decrease, which is really exciting because we were going up we were at our last year at the peak. I think we were definitely in the 4 digits. I think we even hit maybe 4,000 to 5,000 active listings a month, and we were selling, I think, it was insane. We were selling more than what was actually actively listed for that specific month. And now November we were at 22,000, which was the peak for the last year. And now this month December we're down to 20,000, which is about an 11% drop in inventory, which is really cool. But then you got to look at how long these properties are sitting for. We actually have less new listings as well, which is a good sign too. So we dropped in people actually listing their property, and we sold more properties in December than we did in November. So there's signs that we're starting to level out a little bit for sure, but days on market for properties are still increasing. We 2x'd what we did December of last year compared to December of 22. We're at 68 days on market or 69 days on market last month compared to 21. December was 34. So it's just more of a stalemate right now, which is what I think everyone expected. There's less people buying, there's less people selling their properties. People listed their properties and maybe aren't getting what they want for it. And if they don't absolutely need to sell, I think they're just going to either rent it out or just put it back on the market a little bit later, maybe not move until a year or two now when rates start to settle down. Because that's the biggest driving factor is the rates right now. It's like you could have bought a house 8 months ago for $500K and be paying less monthly than if you bought a house for even $350 right now because of how fast the rates increased. So that's the big thing is the monthly payments is what's driving people to not buy right now. And I think Phoenix itself is a little bit ahead of the overall United States. I think what we saw 6 months ago, a lot of the other states are now seeing the fast, rapid decline. So it's pretty interesting to see that too. And like you said too, we talked about it, hedge funds, you're starting to see a little bit more come back in right now.
Yeah.
Which is why I think Arizona specifically, I think that's why we skyrocketed so much is we had a lot of institutional out-of-state hedge funds, long-term management properties buying up a lot of these entry-level homes and shooting the price up. No appraisals were needed for those. They were all cash. So that's what I think drove the market.
Yeah, it was crazy there in the springtime, like in March, like a new Mesa listing would hit for like $500K, and it was trash.
Yeah.
Like it needed like a complete cosmetic rehab, and the thing was getting 10 offers within an hour of going active, no inspection periods, 10K hard EMD, like over ask. When I was seeing things like that going on, I'm like, this can't continue forever.
Not sustainable.
You know, it's not sustainable long term. But I also think the institutional buyers, they might kind of not let the bottom drop out too hard either, because like we were talking about, they have money on the sidelines. They need to keep buying. So I think they would just kind of buy up the bottom and kind of help the market to not completely free fall at this point. It's definitely just different dynamics than it was like last market crash. Like there's so many new variables this time around where it is tough to tell exactly where it's going.
Yeah, exactly. And I think that a big major difference from what we saw 10, 12 years ago is the people are still, even now, like a lot of people still have equity when they bought it, and a lot of people that bought when it was a little bit higher, you would hope that they have really solid rates, or they should have really solid rates. So there's not really a point for them to be really underwater unless the unemployment starts skyrocketing up. But like my rentals, I've not had any issues with people paying rent or anything like that. So I think that's a big difference as well, is people are more structured now, and they have a good rate in place. They have good equity in their property, so they don't really need to sell like the foreclosures that we saw.
They're not getting hit with this balloon
rates too. That was like, I think, I don't know, don't quote me on this, but I think like almost 80% of the loans that were given out during the 2008 crash were 5-year balloon rates that people they weren't even aware of, based on income that wasn't even verified. That's scary. And now they've realized that, and the loans, there's some interesting loans that I've seen get approved and stuff like that in situations, like some DSCR loans. I think that's debt service income ratio.
Yeah, we have a bunch of DSCR loans, and to be honest, like some of them, the way the appraisals come in and things like that, you're just like, I don't know if you should be giving that, like if they're giving these loans out to everyone out there, it's not quite as bad as it was.
Yeah.
But you are starting to see some lenders get a little loose with what they're lending out to.
Yeah, and so the DSCRs, it is equity based, so you do have a little bit of collateral built in there. But yeah, if the prices drop even more, that collateral can definitely get wiped out. But I think we're in a much better place than what we were, and I think a lot of people realize that too. I don't think a lot of people, at least I've talked to, have compared it directly to what we saw 10, 12 years ago. So that's a good sign, I think. I think we're honestly just going to have just a stalemate for a while, at least in Arizona. I can't speak for other states, but Arizona, just read a stat on that too. We were in the top 10 most for inbound moves. So Arizona has a lot going for them in there. Just a lot of the Southwest was like Texas, Florida, Georgia. A lot of those states were increasing in population. So we're definitely having people move in here too. California is having people move out. So I can't say the same about that market because I don't know what's going on. Like New York had a lot of outbound moves, but I think Arizona and a lot of these sunny states we're still going to be pretty strong. I think it's just balancing out what we saw over the last couple of years for sure.
Yeah, it was going up so fast.
Yeah, exactly.
You know, it couldn't continue quite at that rate. But to your point, like New Jersey, we didn't see it start slowing down from the retail side probably until August, September.
That's interesting.
And out in Phoenix, it was like June. It was, you know, we also didn't see though the massive price increases, so it's just a way less dynamic, more boring market.
Yes,
that's a
like good
Phoenix.
Way to describe it. Exactly. We went up, we went down. A lot of other markets went like maybe like that a little bit, and people like I have people messaging me on Instagram like, "Hey, is the market gonna drop?" And I was like, "What do you think?" It's hard to like real. I'm like, "Yeah, I've been in Arizona. We've seen it drop 20% from a lot of the peak, and people are just now realizing that a lot of the residential buyers that aren't looking at the market every day, they're just now realizing that the market dropped to where it is, and they're out of state too, so maybe their market didn't drop as fast. Obviously what we talked about, it definitely didn't drop as fast as Arizona, but it's quite interesting to hear different perspectives too for people that aren't in the market every single day like you and I.
Yeah, it's not like the stock market either. You know, every sub-market has its own different variables to it.
Yep.
So it's not the same thing as just like, oh, is the real estate market crashing? What's happening in Florida is different than what's happening in Arizona and California. There's a lot that goes into it. So exactly. I think you have to remember that when it comes to real estate compared to, you know, talking about Bitcoin or stocks and these other assets we're just seeing drop too.
Exactly. It is a very state dependent, city dependent, even sometimes even smaller than that. Like, yeah, you can't compare the California market where people are moving out to somewhere where they're moving in like Florida. It's like, it's not going to be the same. So
even I've been hearing like, you know, certain zip codes in Arizona, like certain area codes, it's like,
yeah,
like they're still selling, you know, as high as, and they're breaking records and you know, just from a pricing standpoint, prices seem to be going up from what I'm hearing in parts of PV.
Yeah, that's a good point you brought up, because yeah, you're right. The outskirts of Phoenix, I've noticed, like we have a house in Santan, no traffic whatsoever. We list a house in Chandler or Gilbert where there's a lot more demand. It's like a completely different market, and it's only 30, 45 minutes away. That's how specific real estate can be. That's a good point that you brought up there.
Yeah. So I know you are still buying though. You just bought a flip out in Mesa. What's been like the biggest shift for you now heading into this new year as far as buying new deals?
Yeah. So a big thing that we're doing is just being very conservative on comping properties. Like a year ago, we could have comped a property. We were comping properties where like this sold for 300. We'll probably sell this for 320. We end up selling it for 350 because we get a ton of offers in. Now we're like, this house sold 3 months ago for 300. Maybe the ARV on it's around 270 now. So that's what kind of where we're cushioning in a lot of our margin. And that's why we're not buying as much now, because we're very conservative. And a lot of the sellers we're dealing with aren't quite up to how fast their house dropped in value. So there's a big discrepancy between, or disconnect to where we need to buy and to where the sellers are at. And that deal specifically, like for example, he listed that property, the seller listed that property at $330,000 in August or September of last year, and we ended up buying it for $220,000. So we knocked 33% off his original list price, $110,000 off that list price. But it took a month of just back and forth with him. Like, there's no way I'm selling this to you for $220,000. And then he ended up going and under contract 4 different times, and every single time it fell out of contract, the people backed out or just didn't respond to him. So at that point, it was like, I almost felt like I was getting annoying, but you have to kind of do that at sometimes. It's just, there's going to be like a right time and a right place for someone to sell. And I just caught him at the right time. He's like, you know what? I just dealt with this falling out of contract like a 4th time. I'm ready to sell it. So once we got him to that point, we were $5K off. I think he was at 225. We were at 217 for like a week or two, and it was just like so close. I'm like, we can make this work. We'll close. Like, I had to make the terms so aggressive to incentivize him to work with us, but to keep my purchase price at 220, because we needed to be at 220 for it to make sense to us. So I was like, we'll close in 48 hours. It'll be all cash. We'll do a 10K non-refundable earnest money deposit, which basically goes straight to him when we open escrow. So it's like, if we do back out, at least you get 10K. If we do back out, it's only a 48-hour escrow, so you can start the whole thing over. It was really safe for him, and he was very grateful for it. I got a lot of backlash on that when I posted about it, because people thought I was like screwing him over, but I want to reiterate that he was very happy. I think it just took some time for him to realize like what we offered him. He was an older guy. He didn't want to re-rent it. He really didn't want to re-rent it. I know he dealt with some tenants in there that were a lot of drug use and stuff like that. So I know it was a relief for him to finally sell it to us. And so talk about that deal. We bought it for 220, all in cash, 222 after closing costs. We have a safe ARV at 300, and we even cushioned in 2.5% to 3% seller concessions, which is what we're seeing a lot right now. Like almost every offer, the buyer's asking for some closing costs to be taken care of, whether it's buying down points or help with the closing costs, help with the appraisal, anything like that. So we even cushioned in another 10,000 for that. So and we should be making around 30,000 is what our projected profit should be on that if we sell it at 300 with 3% concessions, other commissions, closing costs, and our renovations, 30K on it, hopefully.
Those are good deals right now, ones you kind of be in and out, you're not going to make a ton off of, but kind of keep things going.
Exactly.
And I think that lower price point too right now, they're a little less affected by rates overall.
Because it's a smaller loan,
Even if the carrying, days on market have gone up, if you're only carrying a couple $100,000 versus like $1 million in carrying costs, it's not costing you as much.
Exactly.
From that standpoint too.
Yeah. So that's a really exciting. Yeah, you're right to touch on that on our listing price. It's a single family detached, so it's not a townhome or anything. And it's look in the general Mesa area, it's quite hard to find a fully renovated house, 1,400 square feet for that price point. So that's a big incentive too. We had to kind of broaden out our comps too, because we're like, all right, there's comps that justify 300, but then we looked in the broader area, and we're like, there's nothing that's sold under 300 with this square footage that's single family detached. I'm like, we have that in our favor too, because if someone's just looking for a house in 300, and it doesn't matter where, they'll go to us. Yeah,
and yours is going to be looking brand new, which a lot of the other inventory probably in that price range, it's probably beat up. It's not looking brand new, move-in ready.
Yep. And then if they're at that price point, they probably don't have the money to renovate it to their standards that they want. But if you can get a fully renovated house and build that extra money into your loan, that's great for our buyers. And I think we're going to end up with like a VA, a loan or something like that with a little lower down payment. And we're happy to work with anyone like that, because we understand the demographic of who's probably going to buy this house.
Yeah. No, I love that deal. It's funny, comping right now, it's the opposite of last year. It's taking the lowest comp. Like, I'm talking to some of these agents, they're like, what about this comp? I was like, well, what about this comp, this low one?
Like, and you have to justify it. It's true.
Yeah, we went through a whole year where if you were talking to an agent about comps like last year and you weren't going off like one of the highest, newest ones, they'd be like, well, it's going to keep going up.
Yep.
When the market turns downwards, you have to have that same attitude.
Just the other way around.
Yeah, we have to be more conservative. Like, the market might not drop that much, but what if it does?
Yeah,
and that's what people have to plan.
Exactly. And we got to protect ourselves as wholesalers and flippers too. It's like, what if it does continue to drop or even more drastically? That's how you take losses. The one in Santan, for example, there was a model match comp that sold for $410,000 now 6 months ago. And that's kind of what we used as one of our model match comps, but we bought it at I think July we bought that property, so it's just starting to shift. So we were safe ARV at 375. We just took 35 off the top of it, and we're like, this is what we're gonna do. We now have it listed at 324, and we have one or two showings of the last couple of weeks. That's how fast that market slipped, and it was a model match at 410. So that's almost 100K, 25% drop in real estate listing price, which is crazy.
Yeah, dude, it's one of those things where I think sellers have to kind of understand where we're coming from. Like for a while, it's like, oh, these greedy flippers making all this money. Well, now a bunch of flippers have stories that they've been losing money
big time
recently too.
Yeah.
So you got to kind of see both sides of that. But it's tough because the super distressed sellers, like those sellers will always sell at like big discounts, right? If they have like huge motivation, they need cash right now. I haven't seen like a huge slowdown in those type of sales, but it's like those people that maybe they're looking for the easy button. They would have taken a little less off the purchase price, but now it's like that little bit less to them is a lot less because they're also not factoring in that the market's dropped 20% and that we have to be more conservative on our numbers. So it's harder to make deals work, I just think, compared to 6 months ago or a year ago, where a lot of sellers fit our box.
We could have made it work a lot easier. You're absolutely right. Like now our box is a lot tighter with sellers because we can't go after the ones that maybe want a slight discount. Because if we got a slight discount on the ARV and then we saw an appreciation over the 3 months we worked it, it makes sense to us, profit. But now it's like we can't work with those sellers that want 20K lower than what it's worth, or for example, it doesn't have to be 20K, but just a little below market value. We can't make that work.
Just like that tight number, they had 250 in their head, let's say, but they had that 250 number 6 months ago or a year ago, and it's still at 250. So what would have been a good deal maybe a year ago, just like today isn't. And
no longer.
They're not in the market like us. They're not staying on top of this stuff. They've usually emotionally attached for some reason to a number.
Yep.
And I'm just seeing a hard time making those type of deals work. Are you trying to convert more into listings? I know you don't do like a whole lot of traditional stuff, but like right now, are you also looking at that exit strategy for some leads that come in?
100%. I'm glad you brought that up because a goal of mine of 2023 is to become more of a real estate agent and represent clients. I had a big buyer pool in 2021 when I first started my first full year as an agent, and I do want to get back into it. So I'm definitely trying to find exit strategies for sellers as much as possible, whether it's like, hey, we can offer you cash, but if this doesn't work for you, like I'd love to be able to list it for you and try to get top dollar for it. Because I'm honest with everyone. I'm like, I get a lot of DMs from people like sellers are like, hey, I'm going to list my property next week. Like, what would you be able to offer me? And I'm like, to be honest with you, like, I don't even want to offer you because you're going to be better off listing it. So a lot of the times I won't even send over a cash offer because it just doesn't make sense to them. Whether they take it or not, it's just like, I would just take it to market and get max top dollar for it. Because if it's not completely distressed and you can get a buyer that has like, that can qualify for a loan, because a lot of the reasons why these distressed sellers sell to cash buyers is they can't find a buyer, they can't get a loan on their property, the buyer can't because it's too distressed or it's too messed up or whatever it may be. So I always suggest list it, even if it's not with me, list it. But yes, I am trying to get more listings or just more buyer clients in general. And it is shifting. I'm learning now, it's like shifting my social media structure a little bit to remind people that I'm a real estate agent. Because I realized last year I was so focused on flips that I was like, people don't even know I'm a real estate agent. Like they forgot. So like being top of mind with that too is something I'm learning right now as well. Is like, hey guys, like I am a real estate agent. I do have the time and I'm happy to help anyone. So that's going to take some time. I don't have any active clients right now actually, but hopefully by like 6 months into this year I'll have a few clients looking either buy or sell a couple listings. So that is a goal of mine. And I'm kind of being more creative with that as well. If we can't offer them a cash to flip it or it doesn't work out, let's list it for you. I'm more than happy to do that. We've
been trying to figure out the same thing, whether it's like a novation, pitch creative terms, just like, if you have someone who actually needs to sell and for whatever reason maybe retail's not working, there could be some happy mediums that work for everyone. Like I had Ray Spencer, he's a creative finance guy in here, and a TikTok, like talking about social media, everyone on TikTok's like, you robbed this lady, but she sold him the house for 1.2 million, 0% down or 0% interest, 0 down over 50 years. So so he's paying $2,000 a month, 100% principal pay down every month. For 50 years.
So he's just but she's just getting her money over 50 years instead of up front.
And for her she was stuck on 1.2. And for what
she couldn't find anyone to buy it for 1.2.
No, on market she would have gotten probably like 950 to $1 million. Probably would have had to make some repairs. She's, older lady, not living there, doesn't really need the cash, and she just really wanted the 1.2.
Yeah,
so
I mean,
the only way she was getting that was with really, really good terms.
Essentially payments. It's essentially like paying her out over a payment term. But yeah, I mean, if she wanted 1.2 at the end of the 50 years, she's getting more than what she would have sold it for. Granted, I mean, if she just held it for 5 more years, she might have made even more than that. But it's just coming to terms with people works in both parties for sure. I'm sure she was content. She got her $2,000 a month. That's probably something she can live off of it for an extended period of time. Like, yeah, it's interesting.
Yeah, and people say it's like, well, that's not fair. Like, it would have been better off having it as a rental. I'm like, some people don't want to be landlords, or they don't want to leave this property to their kid, who then has to deal with it. And it's like, let's be honest, I buy a ton of property from inherited type situation, probate deals, where I'm buying it at 70% anyways. Yeah. So at least she's getting full market value. Of course, $2,000 a month in year 2060 is not going to be.
It's going to be a little different.
Not that much, but at least it's mailbox money, and she doesn't have to worry about it. But this was an active listing for over 100 days on market.
Okay.
With a realtor involved, and he just pitched these terms, and it worked for everyone, and they were happy. So I think we're just in a market now where you got to kind of pitch a lot of different options and see what might work for everyone.
Find the pain point and see what would alleviate that for the seller as much as possible. I actually just I have someone that he works for solar, and he went up. He goes door knocking for solar, and every once in a while he'll ask people if they're interested in selling their property. And we actually had a guy. He wanted to sell his property almost immediately, and we're not able to figure out our cash offer for him. So I might be listing his property over. I think he said you'd get back to me February. I'll be ready to list it, and I just been staying top of mind with him as well, and kind of figuring out what would work best. Because originally we went in like, hey, we'll offer you cash, and then that didn't quite work out for us. I'm like, let me just list it for you. It's in good enough condition. So there's all kinds of ways that you can do it, as long as you just talk to the seller as much as possible and learn like what they truly want. Like, because it's a lot of the times, like you said, it's not all about getting top dollar. Sometimes they just don't want to rent it anymore. They don't want to deal with it anymore. They're just sick and tired of something falling out of contract, too much stress for them. And sometimes a lot of people don't need the money. They're aware that they're selling it at a discount, but they don't need the money that much to make it a headache for them. So that's what a lot of our sellers were, was, we're aware a lot of our sellers, like the best ones to work with, I'm like, we're aware that you're getting it at discount, but to me, they either have enough money elsewhere, or they just don't care enough to like go back and forth with you. So there's a lot of that too, where they're well aware of it.
Yeah, it's one of those times where life happens and people do need to sell. So will someone sell at like 50%? Probably not, like, unless they're like super distressed. But there does come a time where it's the kids moved out and they have retirement plans, and no matter what the market's doing, there comes a time where people got to get going. But I think those things, like you said, are playing out a little longer, and things are staying a little stagnant for those people that don't really need to make moves.
Yeah, exactly.
But as time goes on, I think you'll start seeing just eventually it gives way, because people have to make moves, and whether that means the market's going to come down a lot more or not, I'm not really sure. Do you envision like the Phoenix market going back up in price by the end of the year, prices continuing to go down?
I don't think we're going to start to see a huge appreciation this year. I think it will play out a little bit longer. I think 24 we'll probably start to see a little bit of appreciation, a couple percent a year maybe, but I think 23 we're going to see a little bit more of a downward trend. Mid 2023, depending on where these rate hikes go, we may start to balance out a little bit more, and then maybe towards the end of the year, I think that would be a good time to buy, because I think rates will start to maybe drop or level out a little bit, and prices will probably be at their lowest. I don't think prices are at their lowest right now for Phoenix, especially for the overall United States. I think prices will still drop for the next six months for sure. But yeah, I mean, I think 24 will probably be like a noticeable shift back in the upward direction. Yeah. What do you think?
That's what I kind of envision as well. Mm-hmm. I think a lot's going to be rate dependent.
Yeah.
Big so it just depends. Like if rates continue, I know they said they're slowing down rate hikes, but that still means rates are going up.
Yeah, that's what a lot of people forget is they're slowing it down, which is good news, and that's why the market's kind of adjusting to that. But they're still going up.
Yeah.
People forget. Yeah, it's like that doesn't mean it's going down. It means just slowing down the hikes.
So I think maybe towards the end of the year, we might start seeing rate drops.
Yeah.
And then I think once we start seeing rate drops, I think there's going to be a bunch of people that were sitting on the sidelines.
A lot of people
looking
waiting
to buy. So I think that's going to kind of help prices go back up. And, I think a lot of sellers at that point are going to have good inventory to kind of sell. So I think, it's going to be slow here for, I think, still probably the next like 6 months, though, which is a little worrying because it's been slow in the real estate market for the last 6 months.
Yeah.
Now we're going on, right? So it's like a full year of a pretty slow, stagnant market isn't ideal, but you just got to kind of roll with it and just kind of pay close attention and like you said, try to find multiple exits and stay top of mind with those sellers. I do think we have a little bit more time to rework old leads too.
Yeah, big time.
We have a whole pipeline of like old stuff that the numbers didn't work out maybe a year ago, but situations change. And I just think as time goes on, long term in Phoenix, it's a great place to buy long term.
Absolutely.
Right. Like I think for sure, like my house in Gilbert in 5 or 10 years, I'm pumped about.
Yeah.
But over the next, if I have to sell next year, I'd be like, I don't know, man. I might have like no equity in that thing.
It's tough. And I think everyone's on that same page. It's like hold out. And that's why people are just not listing anymore. Like I think there's 4,000 active or new listings last month, which is a big drop. So
yeah. But you look around town still, it's skyscrapers are going up left and right. Apartments are going up everywhere. Businesses,
industrial buildings.
Yeah. Big businesses
industrial buildings
are coming. So I think the macroeconomics of Arizona are pretty good.
Yep.
So I think if that trend continues and we have all these people moving here, I think older people are going to migrate towards warmer places and leave California still. So I think Arizona is going to be a hot spot, but I do think we haven't seen the lowest of pricing yet. And I think in Arizona, a lot's going to depend on what hedge funds do. Mm-hmm. Like I don't think people realize that they were buying up, over half of the inventory in that like cookie cutter, average type American home that people think of. Like those hedge funds were buying up literally, like in my neighborhood alone, when they were buying, they bought like 5 of the 7 houses that sold.
If you fit in their buy box, which is pretty easy to fit in their buy box, those are the first people I went to. Previous buyers from us, that's how our deal worked out, was a hedge fund from a previous sell. They offered us, before we even listed it, they offered us $10K over, and I was like, this doesn't make sense to not take. So yeah, that was a huge buyer pool back then, and I think moving forward, they know much more than us. Like they have so much data, so much analytics that they're probably going to be first at it too when things do start to change. They're probably going to start kind of curving that trend back up big time, and I think it could almost go up just as fast potentially as when it went down too. I think Arizona's always just going to be like this through the cycles. Yeah,
you got to be able to ride that wave for sure. So I'm just trying to stay kind of conservative, like still, like I said, buying a couple deals here and there that make a lot of sense.
Yeah.
And hopefully people give themselves like enough runway. I know you live like a very like modest lifestyle and like you're very conservative with like your finances. So I think like people that like see long term and don't need to do a deal necessarily like next month to keep the lights on or like have these huge operations are going to do okay. But like our team dropped down from like 6 dudes to 2 because it's just like deal flow wasn't really theirs.
Exactly that. Yeah, it's the same thing. It's like I'm fortunate where I don't think I ever overextended myself, but it also sucks to see like that fluctuation of the income dropping down too. But I have like multiple sources. I have my rentals and stuff like that. So yeah, weathering the storm is no problem. But I'm excited too for end of 23 to 24. I think if we capitalize on that, get ahead of it a little bit, I think there's a lot of money to be made as well there too. Just like you said, you have to go through the cycles. You have to deal with the downs if you want the ups, and kind of like everything in life in general. Like if you want the ups, you're gonna have to deal with the downs too. And psychologically, that's something I've learned big time over the last 6 months for sure.
Yeah, I've been trying to not like beat myself up too much during some slow months of knowing like all these other dudes I look up to and I talk to them, they also say like they've been slow.
Yeah.
And business hasn't been super easy. So I think when it's, an entire industry like that is kind of slowly struggling, trying to figure it out, you got to continue to try to, I think work harder and figure out new ways and be solutions oriented, but also not beat yourself up too much and say, oh, I suck at real estate. It's like, nah, dude, it's just like the market. It's rough.
Exactly. Exactly. And just not give up. That's the biggest thing. And yeah, you're right. Cause I know like a couple of my like friends have lost quite a bit. And I'm like, from like perspective, like on that, it's like, well, I'm grateful for not taking as much of a loss as some other people. And then vice versa. Some people are able to come out cleaner than us. It's just, it's the market too. That's just kind of, it's the market in general, especially in real estate right now. It's like, everybody's struggling. It's not just you, and reminding yourself you're not the only one, and talking to people too makes you feel so much better. Like okay, like they understand how I feel. They've gone through the same thing. So like talking to people in the industry helps a lot as well.
Yeah. So if people want to kind of sell you some deals, or maybe they have like a listing that they want Nic Palladino's pretty face on. Where do they reach out to you? How do people get in contact with you?
Yeah, so majority is Nic Palladino Realty on Instagram. That's where I interact with most, because I respond to every single DM. I also have a YouTube channel, which is Nic Palladino Realty as well. And then a TikTok, which is Nic Palladino, and then the number 10 at the end, because someone took Nic Palladino before I did.
Damn TikTok. Well, dude, it was fun having you on, and best of luck this year, man.
Thank you. I appreciate it, Ricky. It was fun.